Hey guys, this is Chris Duhanci from Performance Tactics. I just wanted to make a video going over and highlighting some of the things that I'll be paying attention to on the SPY, the SPY, throughout the week this week. And see whether or not this still has room to climb higher from here. Keep in mind that once you get an understanding of the SPY or the S&P index, you will have an understanding of what the entire market, including what the individual names, will be doing in terms of direction. A majority of the individual names will move up and down with the index itself. So with that being said, based off of last week's price action and the bullish close we saw on Friday, I'm expecting for this to trade higher into the week this week. However, price doesn't move up or down in a straight line, and it's likely to ping pong back and forth, up and down, as it makes its way higher. So fundamentally, as a quick backdrop, all eyes have been on the Fed this year. As they began talking about tightening, the market started to revalue itself lower in order to reflect the new higher interest rate environment. This past week during the Fed minutes, it was said that the Fed wanted to maintain 50 basis point hikes into the end of the year so that they could be flexible come year end. The market was already pricing in 50 basis point hikes, and therefore that didn't affect too much to the downside. But it was not expecting the word flexible, which it really liked, since it indicated that the Fed may stop or pause year end, that there was a chance for it. It was interpreted as dovish, and ultimately that's the reason why the market rallied. Now, if you're interested in finding out more about how the Fed directly influences the direction of the market, I made a video that dives deeper into the details of it. The title is A Primary Driver of the Stock Market, and I will link it to the show notes below. I still think overall on a macro basis, a dominant direction is pointing lower, especially given the fact that the Fed's main objective is to now control and tame inflation. And therefore, they're going to take the necessary action in order to do so, which means raising rates. I'm not attaching much significance to that word flexible. It's just fluff in my opinion, and it means nothing. Just like they kept telling us that inflation was transitory. Therefore, with all that being said, I believe all rallies will be relatively shorter lived and will give us opportunities to get short this market on a macro basis. However, for now, at this point, the short-term momentum is to the upside. So with that being said, let's head over into the charts. The first area that I'll be paying attention to this week will be 419s, 415s. There should be a little bit of resistance coming in over here. If so, and if we do break lower, I see this trading down to about 407s, 403.50s. If that level doesn't hold, then 399, 396.50s. I'd expect some buying pressure to come in at these areas, which is likely to continue this momentum higher for now. Now on the upside, if we were to break through 419s, that'll open the door for us to trade towards 430s, 425s. This area here is a significant level for me, and I'll be paying attention to price for potential reversals and moves to the downside once it gets to, if it gets to this area. But if we were to break above 430s, this can trade higher up to 440s. So that being said, that's going to do it for this video. Please make sure to like, subscribe if you enjoyed the content. We're trying to grow this channel. I'll be putting out more videos like this one, along with general market commentary throughout the week. Thank you for watching, and I hope you all have a good week ahead.